So a stock that I believe you should consider adding to your watch list is Coinbase. And this is exactly why. What's going on, guys? It's Ricky with TechBit Solutions, and I'm not talking about buying Coinbase right now at these levels. I'm actually talking about shorting it. I understand shorting is not for beginners. So if you're a beginner, I think that maybe you should just watch it. You should definitely not trade it. But let me explain why. So what happened with Coinbase recently? Coinbase was trading at highs of 250 per share. It gapped up to highs of nearly 300 and now offers a little bit over 13% of potential pullback if it just goes back to the same price that it was at Wednesday morning. Now, if it retraces back to the lows that we were at on Monday, that's a 21% return on a potential short. Now, Coinbase on the larger time frame is incredibly overbought. It is bullish, but again, there are a series of external factors that can drive down the price of Coinbase, and we'll talk about that in just a little bit. But before we talk about the bad, I want to talk about the good. What the heck happened with Coinbase? Why did it go up? Let's go ahead and break it down. Very simple. So I like to understand the why. The why a stock moves up or the why a stock is moving down. Coinbase launches a new stablecoin payment service for e-commerce. A lot of you guys know is that Coinbase makes a lot of its money through transaction fees in these crypto trades or crypto trading platforms such as Coinbase. With that being said, if they were to enter this transaction or this payment service for e-commerce, being able to get integrated with companies like Shopify would be huge. It would be a revenue source that they have not experienced yet. So you could imagine the excitement behind it, right? This would mean that they are launching, not that they've launched, that they are launching and working on a platform that is designed to make stablecoins a go-to payment method for online transactions, a potentially big leap forward in the mainstream adoption of cryptocurrency meant to track US dollars. Again, why is this big? Well, this is following the legislation that stablecoins in the US Senate on Tuesday, June 17th. Then the day after, June 18th, is when this was announced. So they've announced that it comes as a large retailers have expressed interest in exploring stablecoins for use of payments in online transactions. Roughly, this is the big part, a $6 trillion industry. So you have to understand is that this is exciting because right now a lot of Coinbase's revenue is made through transaction fees for traders on Coinbase alone. Now, how useful could it be or how lucrative could it be for Coinbase to be now a payment gateway on online and e-commerce platforms? Now, trust me, I am not a big crypto guy. I do not necessarily even like crypto, especially not at these levels. But this form of integration would make sense. It would streamline or allow crypto to enter, or a crypto platform to enter a mainstream standardized form of payment. And as people become more familiar with it, then again, that's where they can gain their authority and then transition into investing in crypto if that's actually what it is that they want to do. So the idea would be to be able to compete with companies like Visa and MasterCard. So now, again, the thing that I want you to understand is that this is not a place that Coinbase is currently making its revenue from. So therefore, it opens the door to be able to generate new forms of revenue in a $6 trillion industry to compete with companies like Visa and like MasterCard. That is why the market reacted in such a positive way. Now, is this something that was already launched? No, they are launching, right? So therefore, it still needs to get adopted. It still needs to be integrated, and then it still needs to work and then actually generate revenue. And this is why I'm talking about it. We talked about the pros. The other pro is also that crypto is somewhat bullish right now. So therefore, it gives Coinbase the environment to remain bullish, right? But we all know what's going on in the market. Overall markets are overbought. And even talking about crypto, if we pull up crypto right now, crypto during the overnight hours, or as the stock market is closed in observance to Juneteenth today. Today's June 19th, Thursday. Crypto is trading lower. The thing that I've understood about Coinbase is that when crypto begins to fall, so will Coinbase. So they influence one another, as in crypto or Bitcoin influences the performance of Coinbase. And I want to show you an example, right? As of right now, we're seeing a downturn. We're extremely overbought for BTC, and there's huge pullback potential, right? We could see that BTC is trading at a potential resistance of 110. We're holding at a possible support of 100 to 103. If we break that support and begin to see a downturn, what do we think is going to happen? So this is one of my favorite things about opportunities like this, is that if we pull up Coinbase, especially on these larger time frames, we could also see that yes, Coinbase did experience that downturn that crypto did, just like a majority of the market did, right? It went from highs of 350 all the way down to lows of 150, an incredibly volatile move. I mean, Coinbase is notorious for huge gains, but also huge pullbacks. It lost over 56% in a series of 82 trading days. So again, Coinbase is not new to losing a substantial amount of its valuation. And this is the part that excites me, is that let this thing pump. This is why I'm saying I think that this is a stock that you should consider watching, not a stock that you need to short right now. We all know that markets eventually will pull back. And we all know that the stocks that are the most overvalued and most overbought, just like Coinbase was during all the Bitcoin hype, are the ones that retrace the hardest. The more overvalued you are, kind of like a rubber band, the further you stretch apart, the harder you will snap and come crashing right back down. The overreaction on the upside is the same overreaction we tend to see on the downside. And with that being said, I think it's important to understand that do we have to pull back right now? Well, of course not. This news is very new, and Bitcoin is still not crashing. The NASDAQ market is still not crashing. But now I want to talk about the cons, right? Obviously, in the short term, if we look at the 5-minute or even the 30-minute, we could clearly see that this is an extremely overbought setup. Now, again, if markets continue to hold, it will give Coinbase the condition and the environment to hold as well. I'm not here to sugarcoat that. Just because something is overbought doesn't mean that you should short it, right? But with it being overbought and pushed up to 16%, this is why, again, I want to watch it and add it to my watch list and pay attention to it, because if it does begin to retrace, as tensions overseas between Iran and Israel begin to escalate, as trade war concerns continue to represent themselves because there is no progress with China, and again, as bond yields continue to rise, making it incredibly expensive for people like you and I and the US government to borrow money, there is no rate cut in sight. Things are not looking good. Our economy as a whole is not thriving. It's just the stock market. So if conditions actually do get worse, companies like Coinbase will see the biggest retracement, just like we saw last time. And this is why I get excited when I see opportunities like this, is that it's great when they pump up for investors. I want to make sure that you guys note that I have nothing against those that made a ton of money. I think that's great, but I think it's very realistic for you to also understand is that this pump tends to be short-lived. It's a positive catalyst based off of news on a revenue stream that has not even been generated yet. Yet if things begin to get worse before they get better and markets begin to downturn, then so will Coinbase. And this is where the opportunity lies. We've talked about it before when it comes down to the 3 stages of a reversal. It's no different when it comes down to shorting. It's just the opposite, right? There's the direction being bullish, the consolidation, and then we wait for confirmation of a downtrend. That's essentially what I'm going to be looking out for when it comes down to coin. I like that it was bullish and that it became super overbought. That's the rubber band effect, right? We're incredibly stretched out. But I want to see signs of a resistance and signs of a confirmation of this thing showing signs of lower lows and lower highs. And that's exactly what I'm going to be looking out for this Friday when markets open. I just wanted to make sure that I did my part in keeping you guys up to date. And remember, this is not something that's going to, excuse me, I'm a little sick right now, but this is not something that I expect to happen in just one day. This is something that might take time, right? If we look at the larger time frames, this thing can continue to hold up here at $300 for some time, but it tends to be a pretty common resistance range. And then eventually when it does end up, hitting its resistance and there's no more progress on the upside, It begins to form the lower highs and lower lows, consecutive red days with progress on the downside. And that's really where the big money is made, not just on the strong pullbacks on one given day. Trust me, I get that. That's very attractive. But we all know that, again, there's huge pullback potential. And that's where I believe a lot of money can be made with these incredibly overvalued stocks. The last thing that I want to quickly bring up is obviously the valuation. Currently, Coinbase is trading at a PE ratio of 51.2 times its earnings. It's not super outrageous, but it's definitely not cheap, right? You are definitely still paying a premium to buy into a company or invest into a company that, again, only thrives during bullish conditions because of Bitcoin performance. When Bitcoin begins to pull back, then so does Coinbase, something that I'm going to be paying very close attention to. Now, I understand that, again, a lot of people don't like trading crypto, as myself. But you don't need to trade crypto when you have companies like Robinhood and Coinbase that are publicly traded in the stock market. They're so heavily influenced by crypto performance that when crypto begins to downturn, so do those stocks, because trading activity tends to downturn when those stocks begin to fall apart as people begin to lose more money. So again, something to pay attention to. If you think markets are overbought, it's not that you need to short Coinbase or Robinhood. It's that maybe it's worth watching at these levels. So if we do begin to downturn, you know exactly what you can take advantage of to make money during that downturn without actually touching any crypto. Again, I'll make sure that I do my part in keeping you guys up to date. Just wanted to share the idea with you guys. I thought it was an idea worth sharing. I understand that shorting is not for beginners, and let me make this very clear. I do not want any beginner taking a short on Coinbase or any other stock, because shorting comes at a greater form of risk. Again, I love sharing my ideas because I can, not because I expect any of you guys or because I want any of you guys to copy me, right? I would love to follow up with this video and see where Coinbase follows in the next few weeks. I appreciate your time. I hope that it earned a thumbs up. I hope to see you for my live trading session tomorrow, Friday, right at market open. And if you want to tune on in, second link in the description down below. I'll see you then. Like always, let's make sure that we end the year on a green note. Take care, team.